Well, ibuprofen, the common painkiller, has seen a slump in demand in the past 2 years and the market is still recovering. Pure play API company SOLARA Active's pharma stock has corrected over 70% from its 52-week high. Now, one of the major reasons for the correction has been weak numbers, which was impacted by sales of the API used to manufacture the painkiller drug ibuprofen. SOLARA has one of the largest ibuprofen manufacturing facilities in the world. It supplies to regulated markets with customers going back 10 to 15 years. The company was on its way to commission its new facility in Vizag, which would nearly double its capacity for ibuprofen, along with backward integration plans, that is, to produce the raw materials. This would make SOLARA one of the two players with scale and integration for ibuprofen. However, FY22 saw the company's ibuprofen business hit by headwinds such as price pressure as well as low demand. So much so that it decided not to use the Vizag facility for ibuprofen but make it a multi-product facility. The ibuprofen market was estimated to be growing 6 to 8% year-on-year as of Feb 2021. However, demand for ibuprofen was hit, especially during COVID-19, in regulated markets. The reason for the demand being hit were fewer people were falling sick as more people stayed indoors, and interestingly, there was conflicting claims and reports indicating that paracetamol, which is another type of painkiller, was a safer drug to use than ibuprofen for COVID-19 patients. What then happened was that demand was hit, which resulted in inventories being built up for companies that either manufactured and or sold the final ibuprofen drug in the market. That is, there was a surplus of capacity of ibuprofen in the world. SOLARA, which manufactures the API, saw its volumes of ibuprofen decline by 1,200 metric tons in Q3 of FY22, and ibuprofen API prices, which were once sold at around $16 to $18, fell to around $10 to $12 levels. More so, companies such as SOLARA then faced a lethal combination of low demand of ibuprofen APIs and rising pressure from input costs, thereby impacting their margins. Input costs rose from critical raw materials to solvents such as IBB and sodium dichromate, and logistics, freight costs, all of them saw a spike. So where do things stand currently? SOLARA's Q4 numbers improved quarter on quarter, but it was still impacted by a weak ibuprofen demand in terms of global markets. Realization stood at around $12 per kg versus $16 in FY21. However, companies have indicated that their order book for ibuprofen is much better than it was in the past 2 to 3 quarters, with inquiries now rising. SOLARA is confident of demand recovery in regulated markets. Lastly, the street will watch out for a recovery of realizations to earlier prices, and finally stabilization in input costs as well, especially in the wake of the recent geopolitical tensions and rising COVID-19 cases in China.